Hey you guys, what is going on? Shaquan here from SLFX Trading and for my teaching and coaching program Trade on Purpose. So in this video, what I want to talk about is the missed trading opportunities of 2022. Actually, some of my biggest trading opportunities that came within the April and May time frame, and I'm trying to understand why I'm not in those trades, right? One of the things that I've learned is, as a trader, when you can actually understand why you're not in something, or you've seen the opportunity but you didn't enter, but when you get to the point of trying to question it, right, you get to the point of looking at your psychology and you're digging a little bit deep to figure out that why answer and how you can become better, then that lets you know that you've grown as a trader. And this is what I'm about to go over now. And I said, you know what, let me do a video just to show what this looks like and this process looks like, and to explain my why. But if I can't explain it, it's okay. But were my rules met? Why did I not hold the trade longer? Why was I even in the trade? Or, did I ignore a rule? So we're going to go over my yen currencies, because that's where some, not all, but some of my biggest opportunities have come to. One thing I've noticed this year is that I've not been in the majority of my greatest setups. I have not. I've been in a few. I was able to catch a pound yen trade for hundreds of pips, an Australian dollar trade for hundreds of pips, but there was a recent 600 pip move on AUD for a sale I just missed out on. I missed the whole move, seen the whole move, gave the whole move out, right, to my clients and students. So, hey, price could go here. There was another currency that I missed out on, another setup that I missed out on, seen the whole move, gave the whole move out, wasn't in it. The question is why? I'm going to go over that why towards the end of the video, so make sure you guys stay tuned, okay? So let's go over the Australian dollar. So on my charts here, I have 3 time frames: monthly, weekly, daily. I honestly think it's important that when you are a trader, instead of flipping from time frame to time frame to time frame, you do what's called using a chart layout. TradingView has chart layouts. If you have a free version, you can only see one layout. That's just one bit screen. If you have the Pro version, you can see 2 layouts, I believe. If you have Pro Plus, you can see up to 4 layouts. If you have Premium, I have Premium, you can see up to 8. I don't need the all 8. I just need at least 3 to 4, max 3 to 4, because I'm only primarily now using monthly, weekly, daily, because I gotta hold my trades longer. That's one of my goals, okay? But when I look at my monthly time frame, we're gonna start here where my highlighter is, my yellow highlighter is. You guys can see that price on the Australian yen has been making higher highs, higher lows, higher highs, higher lows, higher highs, all the way beginning from late last year, which means that primarily you should be the buyer. You don't want to look for sales, okay? Unless you're a counter trend trader. I'm going to say that. Now I have one rule about counter trend trader, actually 2. Number 1, I don't counter trend on lower time frames. Number 2, I only counter trend trade if the weekly gives me that permission to counter trend trade. The monthly and weekly have to be in line. So let's look at how that looks. April time frame, and we're gonna go here. So during April, this is where I'm gonna go now to my weekly here. We had a rejection hammer. April closed as a rejection hammer as well, inverted hammers on both. And what this means is that we could see some following weakness, right? And so that tells me, okay, Shaquan Webb, this is a higher high, because 95.74 yen is higher than 86.24 yen. Now, if you're new to trading, or you don't understand why I'm saying the yen versus saying the Australian dollar versus the yen, well, we don't need to say versus. These are not in, like, we're comparing the relative value. And here's what we're comparing. If you lived in Japan and you need to buy the yen or exchange or convert your yen to Australian dollar, you're looking at the exchange rate of how much it will cost. And we could say that during this week of April the 18th, the highest peak or the highest price that it will have cost the Japan residents or Japanese people to buy the yen was at around $95.74. That's the highest peak. Previously, months ago, back in October 21, the highest it would have cost them would have been, and this is also within the same week, October 18th, this is April 18th, so it would have cost them 86 yen, 86.24 cent yen, okay? And so now, what does that mean? This means that now, if I were to be the seller, I would be hoping that price could pull back so they could now buy at a discounted price. I am going to buy at a discounted price and make my money if price continues up. And so this is where structure comes in, at which we call market structure. Market structure just basically says, where is the best price for them to buy in this uptrend and me to buy in the uptrend? Because if I believe that I need price to stay above 78.74 cents yen, it does not mean that I am going to wait for price to touch this exchange rate. Because now we're in pullback cycle or retracement or correction cycle. What this means is that I could sell going all the way back down to where I would want to buy, which will be here based on the monthly time frame, which will be here around 83.73 cent yen. And so in my mind, that's what I wanted to do. However, I understand this is a counter trade, and counter trend trades are very risky. This is a strong uptrend. If you look here on the weekly and the monthly time frame, strong trend. But we can break this down to the daily time frame to say why I think price could go that low. Now, this is where we got to tie all of this information together. This is called top-down analysis, where we're breaking these candlesticks down and this area down. So we could see that this is how price was pushing up. It went into narrow movement, which means you have really tight fluctuations and ranges, which is one of the best areas to trade in, because this is like money coming back and forth. This is one of the market conditions that I teach. And then we went into high volatility, where there's not a lot of pullback because price is in a strong uptrend and it's going into trend continuation. The natural flow of price is going up. And then you can see here in the daily time frame how price made another higher high, but then she made a lower low here on the daily. So from 90.778 to 90.50, this is a 27 pip difference. This is letting us know that the sellers have come into the market and now they're back in control for a temporary time against the uptrend. And so I was, explaining, hey, you guys, price could pull back and then drop just a bit. We don't know how far. Maybe it's going to pull back to our zone or back to the previous low and a little bit lower. This one we can use fibs. And this is when we have to assess the risk. The risk on here is low. And it's actually higher because it's a counter trend trade. If it was a trend trade, it would be lower. But it's higher because there's no guarantee that price will fall all the way down back to 83.73s. So we would take what we can in this area, or you sit on your hands in this area if you're not a strong counter trend trader. And so here, a nice sell could have been taken back down. And as you guys can see, price has created a new lower low on the daily time frame at 87.29 cents. And now if price could stay below 94.052, maybe with the Australian dollar, it may push back down. But here's the thing, the yens have strength right now. Or I would say the yens don't actually have a lot of strength right now. What's going on with the yens, if you look at AUD JPY, like now, price is pushing up. CAD JPY price is pushing up. Pound JPY price is pushing up, which means right now the yen is decreasing, the yen index overall versus these base currencies, right? So what we have to question now is if price is going to increase or decrease, and we can only do that by assessing the supply and demand right now. Supply is the Australian dollar and the Japanese yen, but more so the Australian dollar. How much will the people in Japan be buying the Australian dollar? Are they going to continue to buy at these low prices, which are discounted prices below 95, or will price increase and the demand become higher, the price of the supply become higher, and now people still have to buy? Because regardless of what you say, we trade buyers majority of the time in this market. People are buying the yen, the Australian dollar. People are using, or businesses are doing imports and exports, right? Using the Australian dollar. There is an exchange, right? And so that is what's going on. And so what is the health, the relative value of this? So what we have to now see, and I'm not in this pair, but I'm giving you guys this as an example as to how I construct my analysis here, using supply and demand, using the highs and lows, using the trend. Will price be able to stay below in the daily time frame for what's going on right now? Will she continue to retrace back down to the 83.73s, or will price just continue up and now we're still in that uptrend? That is the question. Now that's the question. Okay, so now because I'm not in this, I'm going to take you guys to a pair that I was in, but I moved my stops, got stopped out, but price is almost at my take profit. Okay, so if we look here on the monthly time frame, we can see how price, and I'm going to do this analysis with you guys step by step. We can see how price made a high. I'm going to move myself here for a second. I'm going to change the way this looks. And which, if you guys are not using templates, I highly suggest you guys should use templates for all of your tools. Okay, so we have higher highs, higher lows, higher high. Okay, when we go to the monthly time frame, we can see this play out a lot better because this information is being broken down. And if you're new to me, then one of my philosophies is that trend doesn't do anything different on every time frame. It's all about you breaking down the cycles of what you see. Okay, so we can see a clear uptrend here. And now what price is doing, if we compare what's going on all of these time frames, they're in the same position right now, the same exchange rates. Okay, now what price is doing is still increasing, it's still pushing up. So we're not selling off, like price is literally in an uptrend. And if we break the weekly down a little bit more, this uptrend, we can still see the evidence of it. Higher high, higher low, higher high. And when price made a higher high at 102.957, what this lets us know is that the people who live in Japan, if they needed the Canadian dollar or need to exchange something in the Canadian dollar, right, did business with people who live in Canada, the highest price it would have cost them back in April would have been 102.95 cents or 96 cents if you want to round it off. And the lowest price was 97.07 yen if you want to round it off as well, around this area here, which means you needed price to stay above 97s in order for price to remain in an uptrend. Because the moment it passed that, meaning this was the last bulk of buyers in the market, and then that price was retracing, if it passes those last bulk of buyers, we would now probably see a retracement back down. But if we don't have that, you got to keep being the buyer, right? That's just supply and demand of how we trade, or how supply and demand is supposed to work. Okay, so I was in a trade from here. Price came and touched my estimation zone where I estimated I wanted price to stay above, and as price went higher, I moved my stops and I was stopped out, and I never re-entered the trade. And that is the thing I'm questioning, like, why did I not re-enter the trade? Such a good trade. Why did I not re-enter? And I think one of the reasons was because I saw USD JPY break out to the downside or past the downside, which I showed you that. AUD JPY retraced a little bit more. There was one more currency probably retraced. I think it was Swiss yen, if I'm not mistaken, because we're going to go to that pair too, that ended up retracing. And one thing I have to always remind myself is when you're trading a branch of currency pairs on the same tree, it's like all of the yens are quotes, meaning they're the second currencies in the pair. Just because one or two look like they're reversing or retracing doesn't mean they're all going to do the same thing. So now I have to watch my correlations. Correlations are basically how you pair like currencies together. So I'm putting all these Japanese yen quote currencies in one pot, and I have to remember they're all not going to go right. They're all not going to go left. Some of them will go right. Some of them will go left. Some of them will stay in the pot. And that's one thing I have to remember. So that's still me learning that part. Okay. So that's something you guys can watch out for too. And so this was a beautiful trade going back up to the upside in trend continuation. So now I'm looking to see if all of my rules were met with TMP. If we look at what happened with AUD JPY, and if we compare the two, I have to compare which one has the highest probability of being a winner. Yes, I could have made money going down. Yes, I could still make more money on this going down. But does it fit TMP? One, the trend of this pair is up. How do we know? Because the monthly and the weekly are in a strong uptrend. So when I traded the daily time frame, or if I would have jumped in on the sell, I would have been trading a counter trend. Would this have been a successful counter trend? yes, it would have been a successful counter trend because I probably would have took 1 or 2 profits, maybe 1, based on my fibs if I was to use this and I had a 1-to-1. So let's see how this would have worked out. And this is something you have to go back and back test and see how it would have worked out. So I probably would have only been able to take 1 trade, which I'm looking at, which would have been a 1.43 risk to reward. Okay, great. Price is retracing again. Can I get a better risk to reward if it stays below 94.05? But it's still a counter trend trade, which makes it more high risk, right, than a trend trade. So because I'm going against the trend. Now, when I look at CAD JPY is less risky because I'm going with the flow of price, I'm going with the flow of trend, and would this have been a better trade? Yes, and this risk to reward was out of this world. The risk to reward of this trade, if I would have set a pending order, or even if I would have entered in manually, was beautiful. So this risk to reward was around a 5.36 risk to reward. Taking a second take profit, the risk to reward on this one would have been 7.13. Now there is some misconception, and because I do swing trade, that if you trade on a higher time frame, it's not good because your stop loss is greater. And you are right, the stop loss is greater, but the take profits could also be greater too. This is a really good risk to reward, especially if I know I'm going to hold these trades. I don't have to come to this period to trade every single day. I'm going to let it run. I'm going to let it move. I get to go and live life. I get to not have to babysit the trade. Like, we have to look at those things too. Now, what made this trade not work was 2 things. 1, I moved my stop loss too early and I know better, so I didn't follow that rule. Now I'm going into risk management. 2, I did not re-enter the trade. Could have been like a confidence, could have been I was busy, anything could have happened there. Could have even been my psychology of the trade too, and it was, as I explained, by looking at the other currency pairs. So this was a really, really good trade. So I'm able to understand my why I didn't do something, and it did deal with psychology. But this was a really good trade. So now let's go to another one. Let's see if I want to do Swiss yen. Okay, here's the Swiss yen trade. Now let's talk about when the counter doesn't work. Because I was in a long-term sale and I got out of this. I took the loss myself. Because I realized, Shaquan, this was one that, you just got to say you're wrong on. Okay? So as you guys can see here on the monthly time frame, price is in an uptrend. Higher highs and higher lows. And if I were to break the higher highs and higher lows down a lot more, you can see that we have a higher high here, higher low here. Price is going up. This is not consolidation. It's splitting in a bunch of inside bars. This is actually a really beautiful trade here, or a beautiful setup here. But it went into high volatility. High volatility means there's momentum. You're really not going to see the pullbacks. You're just going to see candles that look like this. And if you go into thinking, oh, it's consolidation, you're going to be upset and wrong. Because when you break this one area down to the weekly time frame, and I'm going to put like a square here so y'all can rock with me on this. What you see, and this is something I teach people. If you just, top-down analysis means break down the candlesticks. Just break it down to a lower time frame so you can see more of the fluctuations. If you don't do that, you're going to stay stuck mentally, okay? So what I have my students do is, if something goes into high volatility and you have an inside bar, please go to one time frame lower and break down that inside bar. An inside bar is like a sandwich. I like to call it momentum candles. Like, for example, you have this bearish candlestick, and some people will say, oh, price about to drop. Well, do we have evidence that price will drop after that candlestick? Here's another candlestick, a bearish candlestick. But if you look, it's in between 2 green candles. This one is in between 2 green candles. These are momentum candles, and they're telling you, listen, we're going to push back up. Okay? Inside bar. A leading candlestick in between 2 momentum candles. And it can work opposite in a downtrend, where you get a green candlestick or a bullish candlestick in between 2 bearish candlesticks, and it's telling you we're going down. So we're sandwiched in between the momentum of this trend, right? Excuse me. And as you guys can see, price ends up pushing back up. So we have a higher high, higher low, higher high, higher low situation. And this would have been a very good buy based on the weekly time frame. And so now where we are, or where we were, I saw this bearish hammer, inverted hammer, and another bearish candlestick, and I was like, price could go down, but we need evidence of that first. And so come over here to the daily time frame, just like what we saw with Australian dollar, Japanese yen. The same thing can keep happening, okay? And what it looks like was a higher high, higher low, higher high situation. Then we got a lower low here. I'm going to erase this here. Then we have a lower low here. And so what this lets us know is that price could actually decrease to the downside somewhat. And so you could get in some really good quick trades here, because when you counter, you can't think long term with a counter. A counter it can be long term. Like for example, when price went up here to 136.19, this lets me know, okay, people who live in Japan, if they need to do something with the Swiss, the highest peak that they could buy at was 136.19. But the lowest was all the way down here around 123s, 54s, or 55s, if you want to round it, okay? And so what this lets me know is that if I want to continue to be the buyer, price needs to stay above 123.547. And now I'm thinking in my head, price could retrace this low. Now, it's not just going to be a straight shot down. It doesn't work like that all the time. Sometimes it does. But it's not always going to be a straight shot down. And so now what I'm seeing and what went on here, if I would have sold from my estimation zone based on the weekly time frame, I could have got in some really good quick pips, maybe one big trade, like a few hundred pips or something. Let's see here. Okay, so I could tell you guys I only would have had one trade at 1.26, risking 238 pips to gain 301 pips. Now that is a lot of pips, but remember the information is based on the weekly. The higher in time frames you go, this is something that has to be taught as well. And I try to tell other day traders and scalpers, like, if you're a day trader and scalper, why are you on the monthly? Why are you on the weekly? Because more than likely, you're not even really going to use that information. You're not even going to trade to that information more than likely. So that's something that has to be looked at. As you guys tried to show y'all what that TP and stop loss would have been in pips. If you can't fathom that, then you may not want to be a swing trader, okay? But anyway, because you do need a higher account. You do need a bigger account. I'll be honest about that part. So, excuse me, now, when we're looking at it now, if you guys see, like, yes, we have a new lower low. Price is still retracing, but now price is pushing up. And one of two things could happen. Price could still decline and fall. And this could have been another sell situation right here. And the analysis is still on, okay? And this is one that I did get in because price did come to my estimation zone where I wanted to sell. And I just stopped my stuff out because I'm like, okay, price may keep going up. Stop me out automatically. But I want to see what's about to happen. I want to be the observer. Okay? So now I have to look to see if TMP met my rules. For a counter trend trade, it did meet my rules. So it could be like one winner, one loser. Okay? Price may not come all the way back down to here, to around 125s. But that's okay, because when you're counter trend trading, if you counter, you have to be okay with, say, if I counter and I lose, I accepted that risk. This is higher risk, a higher risk trade. It may play out, it may not play out. But now what I am assessing is, should I be countering regardless of the time frame? If so, why or why not? And so this is what, as you're back testing, even as I back test and I go back over my previous trades of why I'm in it, why I move my stop loss, why am I doing what I'm doing? These are things that I'm assessing. Yes, sometimes they're going to work. Yes, sometimes they're not going to work. And counters do work if they're done properly and right. Okay? Just like any trade, a trend trade can work if it's done properly and right. I'm not going to win every trend trade. So that's something to go over. But now I'm going to go over two of my biggest trades right now that maybe, it could work, it may not work. I don't know. But all I know is this needs to be gone over. Okay. I used my feminine energy to trade these. And I'm going to explain what this is really quick. So in trading, there is such thing as masculine energy and feminine energy. Masculine energy, or you could say left brain, right brain. Masculine energy, left brain, is when you are more analytical, methodical, you're more organized, you're more detailed, you go for the hunt of things. A lot of entrepreneurs and business owners and leadership are left brainers, and people in leadership are left brainers. They're more not masculine in nature, but masculine in actions. They go for things, they hunt for things. That's what we do when we analyze and we trade. We're looking for setups. We're hunting for setups. Now, all of my analysis is on here. Let me break it down. Price on the pound euro JPY is bullish. It's going to be the same for pound JPY, so I can go over that faster. They're both bullish. Now, this is a really big, I'm going to get rid of one of these. This is a really, really big bullish candlestick. And so I'm not going to use this one as structure, but the one before it, which is right here. And so I was wanting to see if price could come down and then continue up. But I said, you know what? That risk reward may not look as good. Let's see if it'll come down a little bit lower. Automatically, when I did that, I tried to control the way price would move. I tried to control the setup. As a trader, you should never control the setup. You should never say what you want to see. You should trade what price has given you. As a swing trader, day trader, scalper, whoever you are, don't think of the trade in terms of what you want. Think of it in terms of what price has shown and given you. Okay? That's number one. Because I also missed another big move doing the same exact thing, which there was a trade right here. And actually, one of the newer students, even though he's no longer here, he pointed this out. He's like, Shaquan, you know, yeah, it's bullish, and I was selling most of this counter here. But he even pointed out price could buy up from here, and it did. That would have been for hundreds and hundreds and hundreds of pips, right? And so once again, with the feminine or the right side of the brain, the feminine energy is more emotional, creativity. Like if you're an artist or music, you do music, or you're poetic, you draw or something like that, you're free flowing a lot of things. You may not be as organized. You may not have to be as in control as a left brainer or someone who operates in masculine energy. But I use my feminine, I use my emotions, I use my woman senses to say what I wanted price to do versus just doing the ABC, the logical. And so because of that, I ended up getting into a sell when I knew I should not. I should have been in a buy. Because what happened was price made a lower low here, as you guys can see on my price chart. Price made a lower low, and I sold it when price ended up coming back here, and got, you know, I'm not in the trade anymore, and I should have bought from this area here because price is still in that uptrend. This is where my buy came in at. Another one was pound JPY, the same exact thing, as you guys can see on my price chart. Higher high, higher low, higher high. Price literally pinned off of my zone, but I wanted to see if price could come lower to my great estimation zone here. I wanted to have a better risk to reward. I wanted a better one. And it's still not to say price cannot get there. What it's saying is I just did not follow my rules. I did not. And so I'm not in this trade. When I typically should be, but I'm not. Because I tried to control the outcome. And then one more is New Zealand dollar yen, which I'm not in. But once again, she followed what AUD JPY did, what Swiss JPY did. Countering. The counter. This could have been a really good counter. You know. Actually, I don't think I had a one-to-one on this one. I think I said out of this one. But here's why I'm sharing this with you guys. Because it's an important lesson. We're not always going to get things as traders right. And I'm a coach telling you guys that. And this is what I train people to do. I train people to see. We're not always going to get it right. We're always going to be tweaking something and questioning why we do things. And you should always question why you do things. But there does come a time when you should trade things. And if you don't trade it, try to figure out why you didn't do what you did and how you can become better. What was your psychology? What were you doing? Were you trying to control the trade? Were you being overly emotional? Did you not take it because it just didn't look good? The risk to reward wasn't there. What happened? Why did you move the stop loss, right? And so that is exactly what I am doing here. And I'm praying that you guys find this as a valuable lesson. Find it as a valuable lesson. Like, learn from the people who are in the trenches with you. Coaches are not 100%. If you look at a basketball team or an NFL team, a baseball team, people who play sports, they have a coach. And when the team loses, and like these currency pairs like your team, when the trade loses, it can really affect the coach. when you lose, it can really have an effect on you, right? And then you'll start trying to change things, like you think the strategy is bad. My strategy is awesome. There's nothing wrong with the strategy. And here's what I've learned. I am not in all of my good setups. I have not been placing trades on every good setup. And what I've also noticed is that I've been trading almost every opportunity that I see. But for some reason, with my best setups, I'm not in those trades. Why? And it's due to psychological reasons, as I've stated, but it's also due to personal reasons behind the scenes. And here's what I've also learned. What I've learned is sometimes in life, when you're going through something in life, take that break. I did not take that break. So instead of taking a break to figure out some things in life, I'm just here. And I'm now going back into coaching mode, not so much trading mode this summer. I can coach the heck out of something. I can teach the heck out of these charts. And even before the moves happen, I can see the moves before they happen. That's not the problem. Because the technique is great. But now that I'm finding, okay, what's going on here? How can I combat this? And that's why I've added pending orders recently to what I do now. I got to start setting more of my pending orders. Now it's coming down to trust. Okay? It's coming down to trust. And just dealing with things behind the scenes. Okay? And so, prayerfully, this has motivated you guys. This has helped you guys. If y'all have questions, please let me know. And even if you want to be coached, I mean, your essential coin, your analysis is really spot on. It's really great. I like what you do. I like how you look at supply and demand. If you feel like I can help you, then book a one-on-one, or it's not a one-on-one, but a free consultation with me, and let's talk about it. I would love to work with you privately one-on-one for 6 weeks, only if you're a swing trader, meaning you want to look at the higher time frames like this. You want to be able to hold trades, right? You even want someone to help you assess what I just assessed for myself. You want someone to help you break that part down too. If you need a trading schedule, like I have a really great trading schedule. I only show it once a day, right? Okay. But if this is something that you're looking for and that you need, the link will be down below. And I really do appreciate you for listening and watching this video. You guys be blessed.